So a very good afternoon here on Friday the 7th of December. My name is Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference and the Traders Open Day. And a very warm welcome to all of the regular listeners to the weekly market roundup here at Master the Markets, where we analyze the market at the end of every week. And first of all, let me start with an apology, because last week we didn't get to do the weekly market roundup as we normally do. And the reason for that was because we were hosting a 3-day live trading event, and it was a great event. We ended up net profit with intraday trading the markets, which is of course something else that we do as well on these 3-day live trading boot camps. It was an excellent experience, and the third day was filled with trading psychology. The first 2 days was filled with live markets, us calling multiple trades. I think we called 7 or 8 different trades, mixture of intraday, end of day, currency, stocks, world markets. So apologies for the lack of roundup from last week. We'll do a 2-week roundup for this week, so we can catch up with last week and we can look at this week as well. And on the headline, you'll have already seen it, we've finished with a net loss over the last 2 weeks. So let's go ahead and analyze those trades. Of course, everything that we do here at Master the Markets is very transparent. So as a result of the transparency, when we make a loss or there's a losing week, and that's also transparent as well. So we're not just here to talk about the winners, and there have been some massive winning weeks this year, so naturally there have to be some losing weeks as well. It's the nature of trading, and over here it's the truth of trading. So if you don't like it, I mean, we're probably not the right organization for you, but you know, if you can see through and work beyond losses, then of course we can end up net profit over the long period of time. But I mean, there's nothing to hide here. If we finish net down, we're going to be talking about it. Let's start by looking at the trades for the last 2 weeks, and we'll start by looking at the live trading room. So you know, I always like to follow a general format when we're running these recordings, and especially for the weekly market roundup, I'll always start with the live trading room's results. So the live trading room is basically the trading room where we're working with the accountability traders, the live trade mentorship members, live trade mentorship advanced, and then I'll go over to the Vedanta Elite Journal, which of course is accessible only to the elite team. So there are the 2 trading rooms here at Master the Markets. I'll start with the live trading room, we'll go on to the elite room, and then we'll go on to the topic of this week, which was inspired by a customer that spoke to within the week actually, who was having a little trouble using the smart money indicator and understanding how its use is and what its purpose is. So I thought what I'd do is just make a general guide, really, if anything, that will teach you how to use that indicator, because it's an institutional tool used by funds and institutions and banks and things like that, where they are using it. So it's not sort of the bells and whistles, it's not your kind of flashy, you know, giving you lots of these types of a radar and a scanner and all of the other types of, unfortunately, nonsense that exists in the industry. It is an institutional tool, and I'm going to be showing you how we use it. So let's start by looking at the live trading room trades. We start by looking at the dollar yen. The dollar yen, which we actually held for quite a period of time, from the 21st of November through 4th of December, it didn't get the run that we wanted. We entered the market long on the close of this bar just here, looking for a turning point to formulate in the market, which we then later on saw, and the swing low did confirm. We were then looking for it to run and gain its open equity. And let's just go ahead and pull open the Epic Pen so I can talk to you and draw at the same time. We were then looking for the dollar yen to run for open equity. We were looking for this move to continue on, at least for this swing high here to be broken, but you can see that did not happen just there, and we had the little reversal signal kick in with a reversal primary just here. Even after we had that, we did trail to the low of this bar just here, and then we continued to have further moves to the upside. We continued to trail, and we were stopped out of the market at 113.26, which is around about this price level just here. So you can see we only locked in a small profit. It was a 0.3% just there on the live trading room. 0.3% profit on the dollar yen. Nothing to shout home about, but a profit nonetheless, much better than taking a loss. Smart money, they entered the same dollar yen trade. The only difference is they entered much earlier on the close of this bar just here. So they really caught the turning point with just one bar actually, picking out the bottom of the market. They banked out their dollar yen trade on a trailing stop of 0.46%. So far we have 0.3% and 0.46%, so 0.76% up. Then we took some losers. We were taking a couple of positions short on the euro US dollar. We took some short positions. The first one actually was here, and the second one was just here. And you can see the market did actually progress in the direction which we predicted, but then of course did reverse against us, taking us out for some controlled losses. Overall ending up minus 0.69% down, 690 pounds of downside on this particular week. So that's pretty much it by way of a roundup of the trades that we've taken. Let's take a look at some of the world markets. We'll see there are some interesting things happening. A lot of the predictions that I made on Bitcoin as well have come into fruition as well. We saw that drop off, and now it's very interesting because what we're looking for is we are certainly looking for some upside. So we're looking to make a long-term investment ideally in that particular market. We'll come to that in just a moment. But euro dollar, again, still not really doing that much. You're seeing a lot of volatility on the euro dollar in the last couple of days, but you can see it's pretty much stagnant and sideways. We're looking to see if this swing is going to be confirming here in the market or not. We're looking for a confirmed swing low, and we're just looking to see if this market is going to progress higher. It's been multiple trending bars now since we've seen this low formulate, and what we're looking for, we see that there is actually a 60% chance that the market will actually give us a break of this low. So there is a 60% chance that that's going to happen, but again there's a 40% chance that it won't happen. The stats are a little bit borderline around this area, so it could really, the market very much could go, even statistically speaking, could go either way at this particular juncture. There is also only a 10% chance that this low here can confirm, making this into a variation too. But of course that is probable as well, because all of these have been breaks of previous swing lows, and now you're getting this particular high setting in the this particular higher low setting into the market just there, which would mean only a 10% chance, but it hasn't happened in the recent history, so there is a chance that that could happen now as well. It's just about watching this for now, up until we get a signal from the smart money indicator to give us an indication of what is going to be happening. It's just about taking a step back from this one. The dollar Swiss, you can see it broke the previous swing low already. Swing high is confirmed. It's in a very much downward trend now at this stage. The euro yen, very similar to the euro dollar. Look at that. Look at the sideways compression that's taking place at this time. You've got a downtrend here according to the smart money indicator, but if you get a confirmed swing low in the market, which of course is very probable if you get a close above this high, then what's going to happen generally is you can see a higher low again formulate here. Again, only a 10% chance of that happening, but having said that, it is of course probable still. Keep watching these markets. I wouldn't say that there's anything to do with them now. Dollar yen now in a downtrend. The Aussie dollar gave us a surprise move here, a gap up, quite a significant gap up, and then of course closing the gap just there. The pound dollar not really doing too much as well, a little indecisive at this stage, so we're waiting for a swing low to confirm before we get any more direction. Just one other thing I want to mention about the euro dollar as well. We still have a gap here that hasn't quite closed. If you observe on your which closed on over just there actually, so that was quite interesting, because we had that gap that formulated, and you can see that it didn't close for 1-2 days, but then it did push lower into this day, and then it closed just there. And that's what I was quite curious about. I thought it hadn't closed yet, but it hasn't actually closed the gap. And euro dollar just does generally tend to close all its gaps very quickly, is an observation that I've made. So what I want to do now is I just want to go on to actually compare and just give you an understanding of how the smart money indicator actually works. And again, this was inspired very much from a a customer that I was speaking to a little earlier this week, who wasn't quite clear on the benefits of the smart money indicator. So there are a couple of important things, and I would strongly recommend watching the last couple of minutes of this video over and over again from this point onwards, because what it will do is it will give you a very strong understanding of the Master the Markets methodology and the Master the Market strategies. So it will give you a very, very strong understanding of that and how it all works. And it is important to have this base level understanding. Now, some of the things that I'm going to say may sound obvious, and that's okay. It's just good to reinforce the core obvious points once again, just so we have a very, very clear understanding on. And it sounds obvious because we've basically thought about it in such a way where we can distill it to this level of simplicity. So the first point, there are 4 key points really that are very important with the entire Master the Markets methodology. The first one is that, and this is the premise on which all of these strategies keep working, the first one is that the market does not move in a straight line. It doesn't do that. So the market does move, however, in cycles. So the market does move in cycles. So you do get cycles forming. I mean, we would all agree this for sure. Now, if you know that we have cycles forming in the market, you have these cycles that form. You may call them phases, you may, whatever you want to call them, you know, it's fine. But these tops and bottoms always happen. You get these tops and bottoms which are then dictated by swing highs and swing lows. Swing highs and swing lows must always occur in the market. There cannot be a market which has, for an elongated period of time, no swing highs and lows. It must happen. Even if you look at a recent chart of oil, you will see that there was a large drop off, but even then recently you've had the swing low confirming in the oil market, and that is the important point to note. See, you had a move in a straight line for an elongated period of time, but even then you had a swing low forming. And this is my point. Market always moves in cycles. In cycles, so that's the second point. The market always moves in cycles. And in cycles, swing highs and lows must be created. So point number 2, swing highs and swing lows must always form. Okay? If swing highs and swing lows must always form, then you must always get a bottom to top move or a top to bottom move. Okay? So we call these B to T or T to B. Again, it all seems very obvious at this point in time, but the fact that this keeps happening means the fourth point, which is the most important, which is that open equity must always occur. So open equity must always occur. What is open equity? The definition of open equity is from point of entry to maximum point reached. Okay, it's not to say that you can trade that and capture all of that. That's not the point we're making here. The point is that open equity is from point of entry to maximum point reached. Now, a lot of these terminologies are institutional. You may not have heard them before, but that's okay. It's very important to understand and start to get an understanding of these institutional terminologies and move away from, you know, some of the rubbish that you see in the space. So this is the four points. So just to recap, the market is cyclical in nature, not linear. Second point, that highs and lows, swing highs and lows must form. Third point is that tops to bottoms and bottoms to tops must occur. And the fourth point, open equity must always occur as a result of that. So all we do at Master the Markets is look to capture open equity in different percentages across the different strategies. So we have the money bar strategy, the lift-off strategy. Of course, money bars looks to capture a smaller amount of open equity based on its actual exit from the market. The lift-off looks to capture 70% of the open equity that's available, and the various other strategies, the Vedanta Elite strategies, of course, look to capture smaller or much larger amounts of open equity depending on the model that the elite team are trading. But of course, they are very clear in terms of exactly where they want to get out of the market. Let's talk about some of the uses of the smart money indicator. So the first thing is, with a smart money indicator, you're not looking to get involved in this move here that's already started. So if you've got a swing high confirmed, your goal is not to jump into the market and start to go short. No. Instead, what you're looking to do is you're actually looking to predict the next bottom. So the first rule I would wait for is for this swing low to be broken by the market, if it's going to be broken, and then I would adopt a long position, which would be counter trend, and look to predict the next low before it happens. In money bars, we do this using a PSWB. Of course, a PSWB is a bar that closes greater than 50% of its mid-range. Very important. So that's the idea behind money bars, and this is how we look to pull out PSWBs. You'll see actually on oil, this recent PSWB did confirm just there. It wouldn't have been one that we would have taken according to the money bar strategy, but that's the principle just there. So that's the first use of the smart money indicator. Don't look to jump in to a trade short when you see this arrow forming here. That's not the idea. What you're looking to do is predict the next low, okay? And that's what we do with money bars. So that's one of the key uses. The other use, and it has so many different uses, in fact, the smart money indicator. The other use straight away that I can think of is accurate Fibonacci retracement. See, before, you may have guessed to say that, oh, you know, I think this is a swing high or this is a swing low. You know, with the smart money indicator, there are no redraws, so you don't actually have to ever guess anymore. Once the swing high or low is fixed, it's fixed. It's not going anywhere. It's not going to move. It's not going to change its mind about where it's meant to be. That will never happen. There are no redraws with this indicator. It's a pure price action indicator, and it's fixed once it's set. And of course, the big advantage of the smart money indicator across other swing high and swing low indicators is that it provides the largest open equity that's available. Distance between highs and lows is good. It's quite large, which gives us more of a move to capture and more upside profit as a result of that. So that's the idea behind the smart money indicator. That's ways to use it. So we've talked about looking for a PSWB to go long if you've got a confirmed swing high, looking for PSWB to go short if you've got a confirmed swing low. So whatever's the last confirmed swing on the chart, you're looking to take the market in the other direction. So if you've got a high, you're looking to take the market long. If your last confirmed swing on the chart is a low, so let's find an example of that. Interestingly, there are no last confirmed lows in the market as of right now, which is a little frustrating. Let's see if we can pull open another example. Okay, so here it is, confirmed swing low on corn. Great thing about the smart money indicator, you can use it across any market in the world. Confirmed swing low on corn just there, so I would be looking to take a PSWB short from that perspective. So here you can see at this time you've actually got a PSWB short. So if you wanted to trade the money bar strategy, of course you need multiple criteria for the money bar strategy. I'm just giving one or two out, but you would enter on the low of the bar with a stop above the high, but only after the smart money indicator has confirmed this low can you enter the market to go short. Okay, don't enter it to go short without a confirmed low. Very important. So that's the idea just there. You're looking for a short in the market on that one because the last swing is a confirmed low. So you can use it to predict the direction of the market. You can use it for Fibonacci. You can use it for so many other purposes. If I were to insert a stochastic oscillator, we don't use any indicators here at Master the Markets at all because we trade pure price action. But if you, I notice a lot of you look at indicators. If you wanted to look, for example, at divergence, instead of guessing where the highs and the lows are, I mean, if I take the indicator off, I mean, this is when you'll really start to kind of understand its benefits, because now you can't really tell which ones to compare. I mean, should I compare this point to this point or this one to this one? Should I look at these two? Should I look at this? Should I look at, you know, it becomes infinite what you can do. But the great thing with the smart money indicator is it takes out all of that guesswork. And if the guesswork is removed, if the discretion is removed, then everything you're now doing is quantified and suddenly your results become consistent as well. So I can just compare very easily now point to point, and I can judge if I'm looking for divergence or convergence, and whatever it is you're doing with your indicators, I can judge from point to point without having to guess where I should be looking for divergence or convergence. It makes everything very, very consistent. So that's another purpose of it as well. It also allows you to build your own trading strategies because it doesn't have any redraws, which means that everything you look at historically in back testing will be accurate for forward testing. It's the same algorithm that's used the whole way throughout as well. And as I mentioned already, the highest open equity of any swing high, swing low indicator out there in the market, which is the real core edge. It's allowed us to make over £14,000 on the money bar strategy this year so far. So that's pretty much it in terms of my analysis, in terms of the topic for the day, how to use the smart money indicator. That's pretty much it. So I look forward to speaking to you all soon. Until the next time, stay disciplined, follow your plan, and keep trading like a master. Bye for now.